to Daybreak Asia. We're counting you down to Asia's major market opens.
Australia has just come online. The top stories this hour. Asia is set for a weaker open after a volatile session on Wall Street as US inflation pickup tempers bets on a Fed rate cut in March. The UK cabinet set to authorise joint military strikes with the US against Houthi rebels in Yemen to deter further attacks on Red Sea shipping.
And I'm Yvonne Mann reporting live from Taipei, a day before an election that's set to give investors their first major geopolitical test of the year.
And some breaking central bank news. Peru's central bank has now cut its reference rate by 25 basis points to 6.5%. Of course, it was at 6.75% before. This was in line with what most economists were expecting, including Bloomberg Economics. So Peru's central bank cutting its benchmark rate to 6.5% from 6.75%. That will follow 25 basis point reductions at each of the gatherings in the previous 4 months. Policymakers going to maintain, though, that cautious tone, reiterate that the move doesn't imply cuts at every meeting. Slow rate cuts is what they are terming it. Future decisions will depend on new information. So, Heidi, I wonder if there's any kind of a reaction in markets, but certainly we'll see that in the next Latin America session if that happens.
Yeah, and we do kind of continue to watch that divergence, right, between emerging markets and what we're seeing in terms of Fed expectations, and that's going to play out in potentially a really interesting way this year, given that a lot of these emerging markets, particularly in LATAM, might be in quite a different space than what we see across developed markets. But we are, of course, watching the market open here. When it comes to Australia, just coming online with that staggered session, we're looking like just a little bit of softness at the margins, really pretty flat start to trading, and expectations are that we are looking to set up a pretty mixed session here in Asia, as our investors will continue to pass through the US CPI data, the implications for Fed expectations, and certainly taking March off the table if they expected that. Really, though, ultimately failing to knock down market expectations for lower interest rates throughout the course of this year. We are seeing equity markets in Asia being set up for that kind of muted Friday open there. Contracts for benchmark futures in Hong Kong looking a little bit softer. We're seeing a little bit of upside when it comes to currencies in Asia. The Aussie dollar trading just under that 67 US cent level, I should say, as we saw that pullback, muted as it was when it comes to the US dollar. And going into the start of trading in Japan, Vonnie, I should point out that the Nikkei 225 is poised for the best week in 22 months. We're up about 5% this week, despite some signs that some parts of the Japanese markets are looking overbought.
Exactly. We saw that yesterday. We'll see what happens in today's session. As for US futures, they look to be lower right now. We have them pointed lower after a very choppy session in the session after we got the CPI print, which showed a little firmness in CPI. Now, initial jobless claims, continuing claims, they were low, but the CPI print was a bit higher than expected, and there were a few elements in there that wouldn't have pleased the Federal Reserve. And of course, we're getting this news that a person familiar with the matter says that Rishi Sunak has had his cabinet approve Houthi strikes. So that is also having an impact on this market. You can see that haven trade that we saw in the Thursday session in the United States continuing in the futures session for bonds as well. The 10-year yield finished the session at 396.58. And look at that, crude oil in the United States, 72.98. That's up another $1 from where it closed, and that's very likely on rising tensions in the Middle East. We're seeing Brent crude rise as well. So let's get to that story now and bring in Bloomberg's Nick Wadhams from Washington, D.C. Nick, a person familiar with the matter, telling us that at least in Britain a decision has been made. Can you tell us more?
Well, what we know is that Prime Minister Sunak has authorized strikes, and they could come at any time. So we had been told over the last several days by U.S. and U.K. officials that essentially the Houthis would be forced to face consequences for a repeated string of attacks against commercial vessels in the Red Sea. And then yesterday you had a sort of unprecedented barrage, the biggest to date, where the Houthis fired 21 drones and missiles at ships. Those were swatted down by U.S. and U.K. warships. So that sort of forced the hand of the U.S. and U.K. But obviously there's a situation where they want to restore some sort of deterrence to get commercial shipping flowing back through the Red Sea to the Suez rather than having to go around the southern tip of Africa.
And Nick, there was some speculation that we could hear from President Biden this evening, but we're now hearing from the White House that there are no more public appearances from the president to be expected today. Having said that, this is obviously a joint operation. What are we expecting in terms of potential retaliation? Because the leader of the Houthis has already spoken out.
Yeah, well, I mean, obviously, this would be a very much live debate within the U.S. and the U.K. I mean, the tension point here is between wanting to deter the Houthis from taking greater action, doing something that makes them take notice and allow those ships to go undisturbed. But then at the same time, the U.S. has been saying all along, you know, they do not want to provoke a wider conflict, a wider war in the region. Those two goals have proven increasingly difficult to square. I mean, you have attacks on U.S. forces in Iraq and Syria. The U.S. has responded there, but Iran-backed proxies in those two countries so far seem undeterred. So you're sort of getting into this dance where the U.S. and U.K. want to say, okay, we're going to tamp down those attacks by launching more attacks against an opponent that so far has said it will not be cowed and is in fact threatening only more. So that's basically the definition of an escalatory spiral, and you can bet that's very much on their minds at the White House tonight.
In fact, if anything, it's playing into the Houthis' hands in some ways, because they've already said that they are ready for something like this. Nick, what kind of action could the US and UK take, assuming that action is taken, that wouldn't make enemies out of everybody from Qatar to European allies in Operation Guardian?
Well, I think what you'd see is something that would probably be very careful, obviously very carefully targeted, and it would be limited in a lot of ways at targeting those assets from the Houthis that are aimed at ships, so taking away their ability to launch those attacks on ships. I don't think you would see a broader, sort of deeper set of strikes aimed at taking out the Houthis. That would be virtually impossible anyways, given how entrenched they are now in Yemen and how they've been able to resist Saudi attacks for several years. So it would be much more at eliminating or at least degrading their capability to go after these ships and restore some sort of confidence from shippers that it's safe again to go through the Red Sea.
Bloomberg's US National Security Editor Nick Wadhams there. And certainly so early in the first few days of 2024, the global geopolitics docket looks pretty full already. And this weekend, Taiwanese voters heading to the ballot box to vote for an election that carries serious implications for geopolitics, for trade, for investment. Joining us now from Taipei is our Bloomberg Markets co-anchor, Yvonne Mann, who's there to cover this election. And Yvonne, there are plenty of reasons for global interest in this.
Yeah, and I think there might be a bit difference between what global investors are looking at with this election and what the local community here is going to be voting for as well. But as you say, right, this is one of the most hotly contested national elections that we've seen in decades. And we're just about a little over 24 hours away from when polls will open tomorrow to kick off this election. And certainly a lot is at stake, as we've been talking about all week now. And really the high level, interest in what we're seeing when it comes to what this means for cross-strait relations, U.S.-China relations as well, Taiwan's position, of course, in key supply chains like advanced semiconductors. That certainly is a reason why there's a lot of implications to not just what it means for cross-strait relations, but also the global economy. So, this is a chance for Taiwanese voters to decide what Taiwan's future is going to be. Is it going to be one that is going to lead to, heralding more ties with China, which is exactly what the KMT and TPP is vowing for, or is this about democracy with the U.S.'s backing, which would put the DPP, if they win, a third straight term, and which is something that we haven't seen before.
Well, so given the importance of this to China, any signs of Beijing perhaps trying to meddle in the election in some way, Yvonne, or doing anything that might impact the results Saturday?
Yeah, there certainly has been several things that we've reported about. You talked about the Chinese balloons. There's been some, signs of China really trying to interfere as well with economic coercion, and they've suspended some of these tariff concessions on some Taiwanese products and warning that there might be more. And then, of course, there's some more dirtier tactics, right? We've seen, videos surfacing online, fake videos of President Tsai Ing-wen. Of course, we can't verify where those videos came from, but certainly that does show you just the anxiety that we see leading up to this election. And then, of course, just a few days ago, that sort of missile air raid alarm that certainly sent some panic across the ground here when that alert came on people's phones. It turned out just to be a satellite launch from China, but there was just a bad case of translation as well, because the English side said that it was a missile sort of launch. So certainly that led to some more of why we're seeing this sort of fever pitch leading up to this election now, and how far Beijing is going to go in response to this election in meddling is still a key topic here, but certainly there's a lot at stake here so far.
It's such a great chart that we just showed as well, the Bloomberg New Taiwan Strait Stress Index. And I want to throw up another chart taking a look at expected heightened volatility. Yvonne, you've seen this, right, when it comes to Taiwan dollar versus the US dollar. And over the next week, it is expected to be a pretty rocky ride. Having said that, at the moment, we're seeing traders trading currency options the most bullish on the Taiwan dollar in about 16 years. So how are we expecting the market impact to be expressed?
Yeah, I think it's interesting, right? We've been talking to our guests about this as well, and people are easily to say this election might just be noise at the moment, right? This is just the first sort of major geopolitical test for global investors this year. We saw a lot of elections to come, of course, with the U.S. election in November as well. That might be more the important matter in all this. But when you look at, as you say, local markets, you are seeing that volatility in the currency. But from the analysts that our colleagues have been talking to, this might look more like a slow burn than really some sort of drastic volatility that could ensue. Obviously, if it's something that's a shock sort of win from the opposition parties or either one, that might be a surprise to the market and might actually help sentiment, right? If we see closer ties with Beijing. But keep in mind, we have the Taiwan stock benchmark, very tech heavy. It's trading near all-time highs right now. This is one of the leading markets last year, and that wasn't really because of any geopolitics, but this AI trade that really has helped markets like Taiwan and South Korea. So potentially, we talked to a guest just this week saying, look, the AI craze, that could still continue this year, and potentially it could overshadow some of the geopolitical concerns.
Bloomberg Markets co-anchor Von Mander in Taipei with the latest. And still ahead, top US banks kicking off their latest earnings season, coming off their best quarter since 2021. We get a preview of those numbers with CFRA. But coming up next, we'll be live at Morgan Stanley's Global Alpha Investment Conference in Hong Kong. The bank's head of APAC Wealth Management will be along with us. This is Bloomberg.
I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do, and that work is going to take restrictive monetary policy.
Cleveland Fed President Loretta Mester there after commenting following the latest data showing U.S. inflation picking up just a little in December. For more, Bloomberg's Enda Curran joins us now from Washington, D.C. So, Enda, I love how you put this in the M Live blog. You said today's data don't quite throw a bucket of cold water over the rate cut debate, but they do add a sprinkler effect. Does that mean rate cuts later, or what exactly?
Well, I think the data today undoubtedly shows you that the US inflation story hasn't totally gone away. Vonnie, when you look through the numbers, airline fares are up, the cost of used cars are up, the cost of auto insurance rose by the most last year since 1976. Then you get the big ticket items like energy costs and, of course, shelter costs all up. A reminder that for all the disinflation going on in the US and the pressure coming off goods prices in particular, there are pockets of the economy where prices are proving to be quite sticky, and that's obviously a complication for policymakers now. One of the core readings that the Fed looks at, that kind of came in more or less where they wanted to be, suggesting inflation is heading back towards the 2% target. But I think today's numbers do give pause for thought that maybe this inflation is not going to be necessarily a linear line. It's going to be more of a bumpier path back down to that target.
Talking about a bumpy path, that's a Chinese recovery for you. We have a decent data dump today when it comes to trade and the deflation picture as well. What are you watching most closely?
Well, so the inflation story in China is going to be very different to the one here. Both consumer and producer prices are expected to have contracted together. That's obviously quite a standout. And on the trade side of things, both numbers will be interesting. Imports are expected to be weak, and that will, of course, speak to weak domestic demand and sort of underscoring this idea that the Chinese economy hasn't roared back the way some thought, even though we're heading into the holiday period where apparently consumers are gearing up for good spending there. And on the other side, the export data today out of China is supposed to be weak, and that will speak to the whole idea of weak global demand, weak global trade, and of course that's certainly not going to be helped by the ongoing developments in the Red Sea. So I think the net takeaway from today's numbers are going to speak to the idea that weak inflation reflects weak demand in China, as does weak imports, and of course the Chinese export story will just speak to the idea that global trade remains in a slump and not much sign of a turnaround there anytime soon.
Bloomberg's global economics correspondent Enda Karan there in Washington. Well, the annual Morgan Stanley Global Alpha Investment Conference is taking place in Hong Kong. Annabelle Droulers is there with our next guest. Belle.
Thanks, Heidi. Yeah, kicking off with that theme you were just talking about, the Chinese economy, we really perhaps still haven't seen the lowest point for it just yet. And that's really one of the key themes that's going to be discussed today at the conference. Let's bring in our first guest. This is Morgan Stanley's head of APAC Wealth Management, Vincent Choi, joining us. So, Vincent, I was listening to your interview that you actually did at this event last year, and you were very bullish on that point about China, about Hong Kong, the reopening theme. How are you feeling going into this year?
Well, good morning, Annabelle. Thank you for being with us today. Last year, I was very constructive in terms of opportunities which will be brought to us with the reopening. I think a lot of that, as far as our industry is concerned, has played out pretty well. I think most of the private banks in this part of the world have done pretty well in terms of catering to the wealth and investment need of the wealth clients, not just in China, but across Asia. Now, obviously, in terms of the investment opportunities, depending where you put your money, if you put your money in, for example, mainland Chinese stock, I think that will be challenging. But a lot of the wealth clients, actually, their investment need is global. If you put your money in the Magnificent Seven in the US, I think you'll be pretty happy.
So you're catering to ultra high net worth individuals. So where were they really putting their money then? Is it not into Chinese equities?
Well, I think U.S. is perhaps predominantly the very significant destination of wealth right now. I would argue that a few years ago, I think with the robustness of the tech sector in China, I think a lot of money is put into that sector, actually particular way. But right now, I think that U.S. is really such a massive destination for everybody. So therefore, actually, the question is really about diversification going forward, and there's not exactly a lot of markets of that size where people could put money into.
So when it does come to diversification, though, are you sort of changing that investment thesis? Are you still seeing US exceptionalism over the course of this year, or are you recommending that people go into alternative areas or regions to invest instead?
Well, we are very, for example, in this part of the world, we are very constructive and bullish on Japan. But once again, coming back in terms of the size of the wealth here, right? And most of the clients, and particularly ultra high net worth clients in Asia, that honestly, that US remain the theme. So therefore, you think about outside there's a big tech sector, the Magnificent Seven in the US. The question is really about what's the eighth one you want putting money into, because this is the size factor.
Japan, one of the key reasons that investors are still continuing to prefer it is the geopolitical element, because investors are pulling out of China, they're pulling out of Taiwan. How are your clients really navigating those tensions in this region?
Well, I think, once again, the most important thing is everybody has a different need, right, depending on where your wealth is concentrated in. If you are not in China, if you're in Taiwan, for example, then perhaps your need is very different. But as far as Japan is concerned, I think, yes, they are beneficiary of geopolitical tension in this part of the world. But at the same time, I think ever since Abenomics took place, I think there's a lot of restructuring, transformation going on in Japan already. So it's a lot more than geopolitics. As far as clients in this part of the world is concerned, I think they have to think about, okay, well, if my business already in China or my business in Indonesia, how do I actually try to diversify a little bit as a business or actually as in terms of wealth is concerned?
Where are your clients choosing to base themselves? Because we've seen the fallout from the money laundering scandal, for instance, for Chinese clients or family offices in Singapore. In Hong Kong, for instance, there's a new ordinance law that's taking effect later this month, and it would make it easier to enforce civil court proceedings in mainland China in Hong Kong. So a bit of concern there. How are clients really reacting to that? Are they looking for other markets to base themselves?
Well, I think because most of our clients, once again, in the ultra-high net worth segment, they actually prefer to be still in Asia. Most of them are at the age group where they still want to be active in doing their business. So yeah, I mean, look, in theory, many of them could move to countries outside Asia, but I think most of them prefer still have a significant base or domicile in either Singapore or Hong Kong. That doesn't really change. And different countries offer different schemes for them to actually get into in terms of family, etc. Australia, for example, is one. So I think everyone is very different.
You're also working with the Hong Kong government to try and look at ways that we can boost stock turnover in the city here. It has been really low over the course of last year. Before that as well, we don't have a very strong IPO pipeline either. What are the sorts of measures that you're looking at introducing?
Well, I think the Financial Secretary will speak about that in about half an hour or so, so I'll leave it to them to talk about the details. But I think generally speaking, in terms of the market turnover, you look at two things. There is the competitiveness of the market itself in terms of the constituent stocks. That's something which I don't think we can change it. It's up to the market to choose where you list the stock and whether actually in your marketplace, whether you have sectors and stocks where clients are very focused on. Hong Kong is not exactly a big tech market, so that I think we are behind, honestly. But in terms of the tactical area, Hong Kong remains the most transparent, most open, most liquid stock market. You look at the fact that most of the large quant hedge funds, passive funds, they're based in this part of the world. I think they are very crucial, and I think some of the measures we contain in the task force recommendations address that. And I think the Chief Executive of Hong Kong SAR fully embraced that. So I think later on you'll hear the Financial Secretary talk about that.
It'd be great if you could share some targets with us. So in terms of headcount plans, how many are you planning to hire in this region this year? And then also how much are you planning to grow your assets under management?
Well, I think I think every firm is slightly different. I think some of the banks here are a very large size. Morgan Stanley is never about large size in terms of talent. We right now have about 140 RMs just in Hong Kong and Singapore. Personally speaking, if we can get to like up 10-15%, I'll be very, very pleased. But once again, in the ultra segment, I think the talent pool is very, very small. And also we care a lot about cultural suitability. So I'd rather not have a target, but I would say that I'll be very happy if I can get to that level.
All right, a little bit of quality over quantity perhaps. That was Vincent. Thanks so much for your time this morning. That was Vincent Choi, Morgan Stanley's head of APAC Wealth Management, Vonnie.
And that's Annabelle Droulers in Hong Kong. Annabelle, thank you so much. She'll be back in just a little bit because there's much, much more coming up from the Morgan Stanley Global Alpha Investment Conference. The bank's head of applied equity advisors, Andrew Sliman, joins us the next hour. This is Bloomberg.
Of course, we're paying still close attention when it comes to cryptocurrencies after the SEC's really milestone decision to grant approval to spot Bitcoin ETFs. We're seeing trades top $4.6 billion in what has been a groundbreaking day for those first US ETFs to directly hold Bitcoin, broadly higher across the board.
CPI coming in hotter than expected.
CEOs are already complaining about inflation. They're saying the cost of doing business is higher.
And that has proven to be very sticky because of wage inflation.
From wage increases to higher interest rates.
This economy is rebalancing. The labor market is rebalancing.
It's not a sprint. This is a marathon.
That still puts us on a downward trajectory for inflation.
We think that the Fed probably won't start cutting rates until around June.
They're going to have to be patient. They're going to have to wait.
Push back the timing of the Fed's first interest rate cut.
Likely not 6 rate cuts, with the first one starting in March of 2024.
And the key thing will be the course of inflation.
We see less rate cuts, and we see them starting later because the Fed needs more data around inflation easing.
Bloomberg TV guest there weighing on the latest US inflation data, its implications for Fed policy. Ultimately, that doesn't seem to sort of markedly change expectations of the trend of lower rates, right, at least as we get past March. This is a picture as we get trading underway for about half an hour or so here in the Sydney session for Friday. We are seeing a bit of downside there, about 0.3% there, as we also see a little bit sort of more resilience when it comes to the currency. The dollar in particular briefly erasing that drop, but really we are seeing pretty muted trading there with the Aussie dollar and the Kiwi kind of holding most of that resilience. When it comes to Kiwi stocks, we're down by about 0.25%. Singapore Nikkei futures are looking flat at the moment. We're coming on to a session for Japan where the Nikkei 225 is really positioned for the best week in 22 months. We've already seen a hefty 5% gain this week with the trading day still ahead. This, as we see, signaling at least when it comes to the topics, that according to the RSI, if you're watching that we are pretty close to overbought conditions, and potentially if we see a repeat of what we saw back in September, that could see a bit of a correction or a pullback for Japanese equities. US futures at this point looking just a little bit to the downside, Vonnie.
Well, Heidi, if you can believe it, we're back into earnings season. U.S. banks set for an earnings showdown after their best quarter since 2021. JP Morgan, Bank of America, Citigroup and Wells Fargo will kick off the reporting cycle for corporate America on Friday. A gauge of U.S. bank stocks gained 23% last quarter. Looking ahead to U.S. bank earnings then, JP Morgan, Bank of America, Citigroup, Wells Fargo, all due to report in the U.S. Friday. Let's discuss this with Ken Leon, Director of Equity Research at CFRA. So, Ken, we already got warnings from the likes of Jefferies Group and also Citigroup on trading revenue. Broad strokes, is tomorrow going to be a positive day or a negative day for the banks?
Well, it's great to be here, and there's a lot of cleanup, a lot of one-time charges, as we saw with Citi, kind of pre-releasing that for the fourth quarter in 23. But the market and investors are forward-looking, and we're going to see validation that the U.S. economy will have a soft landing. There will be loan growth, but it will moderate. And importantly, on the dark side for banks, there's going to be less of a conversation as it relates to credit risk or the risk that there will be significant loan write-offs. So putting that on the backdrop, the opportunity in 24 is to see some upturn, although perhaps not early in 24 for investment banking. And also the durable businesses of asset management and wealth doing fine. So banks are complicated. It's up to analysts to really sort through what's important. And I'd say overall, the economy looks fine. Their expectations on earnings are low, so there's room to do better. But the real conversation, which is going to be more subtle, is talk about capital build. Generally, you would build capital build or shareholders' equity to save for a rainy day or something wrong. Unfortunately, it's going to be tighter regulation coming later at the end of the year, which we could discuss further.
Yeah, absolutely. I'd like to do that. Let's go there right now. In fact, Ken, so, we've been hearing a lot about this. It's been out for public review, public comment and so on. There have been hearings and, we're there now. Are the banks ready for it? Are they going to be crimped as they say they are?
They're certainly going, well, many of the CEOs were in front of Congress in late December saying any solution, which is the Basel III endgame, of having higher capital requirements of 15 to 20% will hurt the U.S. economy. When you think about it, though, one of the worries of regulators, whether it's in Europe or in the U.S., is the black swan or the unexpected event. So a lot of the increased capital requirements really relates to the worry for areas in trading of the more complex, longer duration instruments. Credit Suisse comes to mind, but there are so many in the past. And that's going to be really the difficult area for banks, because investors look to banks to invest because of dividend increases and share buybacks. So I think you're going to hear kind of the diplomatic term capital build both by the managements and the analysts.
Yes, I think we're going to have some frank discussions on those calls about what it all means for the banks. Ken, I mean, we know that the Fed is worried about commercial real estate and things percolating under the surface at some of the banks. Any ones we should be watching in particular for, you know, in that regard?
We watch it very closely, along with, quite honestly, credit risk in all the areas. But for commercial real estate, it's specific to office real estate. It gets to be a little bit more magnified for some of the regionals or smaller banks. The global U.S. banks really don't have any material risk to commercial real estate. It's what I call something idiosyncratic and not systemic to any banking crisis.
So I know you think that JP Morgan and Morgan Stanley have the best chance to deliver a better than expected performance in 2024. What about just generally valuations? Are PEs, for example, reflective of fundamentals right now for most of the banks?
So share prices can move up either because of improved earnings or for expanded multiples for valuation. And right now we think in 2024, if the economy remains strong, the banks may have over-reserves, so they might have releases of reserves in the second half of the year, which would boost earnings. Not the best way to show quality growth, but that's true. Additionally, banks are all trading at a significant discount to the S&P 500. Most except Citi are trading, slightly above par in terms of net tangible book value. We're staying with the quality names, which right now have underperformed in the last 13 weeks, that being JP Morgan Chase and Morgan Stanley with buys. Citigroup has captured really the bullish view of analysts, mostly on the transformation led by Jane Fraser. But when you hear the word transformation, that's a multi-year process, one where there's going to be a number of bumps along the way to then really figure out what is the earnings power of a bank like Citi. They're in the right direction, but we went through this kind of journey with Wells Fargo over the last 3 to 5 years.
Yes, we did. Yes, we did. And we did it together, and we'll do all of this together as well. Kenneth Leon, thank you so much for joining us. Ken Leon is Director of Equity Research at CFRA. And you can also turn to your Bloomberg for more on all the big bank earnings. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. This is Bloomberg. You're watching Daybreak Asia, the top corporate news. U.S. air transport regulators have opened a formal investigation into Boeing's production operations following last week's mid-air door blowout. The FAA says Boeing needs to comply with the high safety standards that they're legally accountable to meet. Regulators grounded 171 of the 737 MAX 9 jets in operation, prompting airlines to cancel hundreds of flights. Airbus set a sales record in 2023, racking up more than 2,000 net orders, and was been one of the most active purchasing periods in aviation history. The sales were driven largely by the plane maker's mega deals with India's Indigo, Air India and Turkish Airlines. Airbus also beat its annual delivery target by achieving 735 handovers. Reuters is reporting Tesla will suspend most car production at its factory near Berlin from January 29th to February 11th. The move stems from a lack of components due to shifts in transport routes because of the armed conflict in the Red Sea. And we're actually getting a headline on that right now. The US and the UK have launched airstrikes on Houthi targets in Yemen. Once again, the US and UK have launched airstrikes on Houthi targets in Yemen. Bloomberg has been told the U.S. National Security Review of Nippon Steel's takeover of U.S. Steel is likely to last until late this year and possibly into 2025. Sue Keenan has been looking into this. And Sue, that's a lot longer than the companies have publicly stated.
Yeah, it really defies their forecast. We heard from both companies at the time of the deal and then reinforced in late December when U.S. Steel had its earnings conference that they expected the deal to close at the spring, end of summer at the latest. But sources close to the matter tell Bloomberg that a national security review unlikely to conclude until late this year at the earliest. That, as you can see, knocked the stock down briefly. It was down almost 4% before paring those losses. Now, sources tell Bloomberg the deal now under the scrutiny of the secretive Committee on Foreign Investment in the U.S. and that the review is in its early stages. This is a special interagency panel which is led by the Treasury Department, and it has the power to approve, block, or amend the deal on national security grounds, or they can send it back to President Joe Biden for a decision. So again, while the precise timing of the review remains unclear, people familiar with the process said they expected it to take about a year or longer, and that the process can lurch ahead and sometimes pause amid legal wrangling, which is typical given the scale of this review, a sale of an iconic U.S. company to a major Japanese corporation.
Tell us about the impact that this deal could have on the presidential election.
Well, there was a lot of opposition initially from Democratic lawmakers and from the Steelworkers Union. What we know is that U.S. Steel is located in Pennsylvania. That is a battleground state for the 2024 election. It is also the state that President Biden was born in. And so we know that Nippon's plans actually touched off a call from the White House last month saying that the deal deserved, quote, serious scrutiny.
Bloomberg's Sue Keenan there with the very latest. And speaking of developments that we're watching at the moment, particularly when it comes to the geopolitics of it all, we have heard now really confirmation that the US and UK have launched airstrikes on Houthi targets in Yemen. Local residents reporting that blasts have rocked Yemen cities of Sana'a and Hodeidah. And we're also hearing Reuters reporting there of those strikes taking place. And this, as of course we heard from that authorization of joint military operations, the airstrikes against the Houthis from the UK's Rishi Sunak. We haven't heard from President Biden. We're not expecting him to speak throughout the course of the rest of the day, but now confirming that the US and the UK launching airstrikes on Houthi rebel targets in Yemen. This really potentially risking a further escalation, as we see it, of that conflict with an Iranian proxy group in response to what has been really an elevated string of attacks that have disrupted commercial shipping in the Red Sea that have really been ongoing. A US official who's asked not to be identified before a formal announcement has confirmed those strikes have taken place, intending to hit a source of the militant group's attacks. And coming after, the Biden administration warned that there would be consequences for a barrage of drones and anti-ship missiles that has targeted ships in that vital trade waterway. And, you know, we have spoken, Vonnie, about the escalatory spiral, right? Because we know that the leaders of the Houthi group have already said that there would be retaliation if the US was to take action.
Yes, exactly. And adding to the turmoil, Iran had seized that tanker off the coast of Oman Thursday, and that had been sending oil prices higher. This is just adding to the turmoil in oil markets as well. As we know, Heidi, the Houthis launched their largest assault yet on shipping in the key waterway, having had that warning and several warnings. In fact, Secretary of State Antony Blinken in the region even repeated that there would be something to deter the Houthis from continuing these attacks if they didn't stop. And they were taking that rhetoric and basically saying, bring it on. And they had reiterated that they weren't going to attack anybody that was involved with shipping that didn't stop off at Israel. They would only target ships that were going to have truck with the likes of Israel, because of course their goal is to identify with the Gazans and the Gaza cause. And so there is a path out of this, but not the current one that's ongoing. And certainly Qatar is saying no strikes. Strikes will not lead to anything good. There's going to be a vicious cycle. They're not going to be pleased tonight.
We are watching that reaction when it comes to energy markets in particular, right? We do see oil climbing on these rising tensions in the Middle East. The confirmation now of the US and UK launching these joint airstrikes in Yemen. We do have much more to come. We'll get you the details of this breaking story as they get to us. This is Bloomberg.
The US and UK have launched airstrikes on Houthi rebel targets in Yemen. This is according to a US official who asked not to be identified before a formal announcement confirms the strikes. However, the US official has told Bloomberg the US and UK have launched airstrikes on Houthi rebel targets in Yemen. This escalates a conflict with an Iranian proxy and is, of course, in response to a string of attacks that have disrupted commercial shipping in the Red Sea. And you can see the reaction in crude oil markets, up another 1.75%. Haidi at 73.27 right now for a barrel of WTI. This after Iran had seized a tanker off the Gulf of Oman, which had sent prices higher even earlier.
And we'll continue to watch really for the market implications, right? A lot of geopolitical risks are brewing. Of course, we've been monitoring this widening conflict situation in the Middle East. We do have the Taiwan election this weekend as well. And in the meantime, we've been watching for these levels for Japanese shares really continuing to surge in the new year on bets that they'll benefit from that Goldilocks situation of the global economy. Neither too hot nor too cold. They're also attracting funds fleeing China's stock slump. Bloomberg senior Asia stock reporter Haidi Stroud-Watts has the details. So, going into the new year, we sort of listed some of the challenges, right, for the next leg higher for this Japan equity rally. So far, we've seen, 5% for the Nikkei 225, looking like the best week in about 22 months. And technical indicators looking like we're pretty much in overbought territory.
Yeah, exactly, Heidi. So at the beginning of this year, investors' expectation was basically that after such a big rally last year, the Nikkei's top side might be limited for the time being, especially given that the Bank of Japan is likely to tighten its policies sometime in the future. Now, of course, the expectations about the BOJ's tightening have receded sharply after weather's recent remarks, as well as the deadly earthquake that happened on the New Year day. So that is helping Japanese stocks, but there's more to that. And one reason is the expectations of Goldilocks economy globally is helping Japanese stocks, because Japanese stocks are considered to be one of the cyclical shares in the global market.
Oh, yes, I did. Thank you. Yes, I totally forgot I just had a phone call 2 minutes ago.
Bloomberg senior Asia stock reporter Haidi Stroud-Watts. So we'll continue to watch to see if we do in fact have those further gains when it comes to the Nikkei 225 after that 5% rally so far this year. We do have some data when it comes to Japan balance of payments, a current account balance there just crossing the Bloomberg as well. When it comes to the adjusted current account surplus coming in at 885, I should say, trillion again there. We're seeing the current account surplus there unadjusted at 1.9 trillion yen. That is a little bit lower than the 2.38 trillion that was expected. The trade deficit coming in at 724 billion yen. And of course, a lot of this really feeding through with each incremental read, particularly on the side of inflation and some of those wage gains, Vonnie, informing what the Bank of Japan will do. But at the minute, we really are focusing on what we're seeing in terms of the developments on the geopolitical front.
Yeah, exactly, Heidi. Just to recap, a bilateral action on the part of the United States and the United Kingdom. So the US and UK launching airstrikes on Houthi rebel targets in Yemen. That has happened. We know this from a US official who asked not to be identified because there presumably will be a formal announcement at some point to confirm the strikes, but the official has told Bloomberg that the US and UK have launched airstrikes on Houthi rebel targets. We're seeing a reaction in oil markets because this could potentially be a quite serious escalation in the Middle East conflict, depending on what happens next. We know that several nations were against this kind of action and had been looking for some other way to try and calm the waters, as it were, quite literally in the Red Sea. But Anthony Blinken, Secretary of State, had warned repeatedly that there would be consequences, and this looks to be what the consequences are, this bilateral action that has taken place. Heidi.
Yes, the US and UK launching airstrikes on rebel targets in Yemen. And Derek Warbank joins us now, managing editor with the latest. And Derek, you know, this kind of puts in place the likelihood of an escalatory spiral now.
Look, this is no question. This is an actual escalatory step. The U.S. and the U.K. had warned that there would have to be some reaction if there were strikes that were continuing. We've seen shipping disruptions, ships try and go around Africa rather than utilizing normal sea routes. Those attacks had not stopped in the main shipping lanes there in the Middle East, and so this is definitely a reaction, an escalation. There have been concerns that you know, you start escalating. Where does that escalation end? I do think that has been a concern that has been playing here. I also it's very clear from some of the reports that we're seeing in that these strikes have begun, that the case was made in both London and Washington that the risk of an escalation beyond where they're escalating to right now was worth taking. So this action being taken place right now, again, the headlines that are just sort of crossing over right now is that the U.S. and the U.K. have launched airstrikes on Houthi rebel targets in Yemen. We've got reports of explosions in places around the country, very, very preliminary right now. So this is just the beginning, and stay with us. We'll have a lot more information as this story develops.
Breaking news managing editor Derek Warbank there, and we'll bring you the latest on those developments plus the market reaction as it gets to us. We do have the market opens in Seoul and Tokyo next. We'll be watching for any kind of reaction, particularly when it comes to energy markets. We are seeing crude trading higher on this development with the US and UK launching airstrikes on Houthi rebel targets in Yemen, really escalating on conflict with the Iranian proxy in response to the string of attacks in the Red Sea.
This is Daybreak Asia. We're counting you down to Asia's major market opens.
And it is a lot for investors to contend with, right? We're heading into a weekend that holds for us the key vote in terms of the Taiwan elections. That was supposed to be the first kind of test of geopolitical appetite for these markets that are so firmly trained on Fed easing. And of course, the inflation data set that expectation back just a little bit. But Vonnie, at the moment, front and center, we're really looking at the escalation when it comes to this Iranian proxy conflict in the Middle East, with the confirmation of US and UK coordinated airstrikes. Retaliation, given the number of attacks that we've seen in the Red Sea, but certainly these concerns of an escalatory spiral are very, very real.
Exactly, Heidi, and we're seeing reaction in oil markets at the very least, with crude oil up 1.7% right now. But have a look at how Asia is opening. The Nikkei 225 on track for a third straight day of gains. Look at that, up 1.6%, roaring out of the open. We had foreign travel exceeding expectations in November, as well as other data out of Japan that will have helped things. The Topix up 0.8%, and the yen continuing to strengthen there, 145.09. The US dollar more than 0.1% weaker versus the Japanese yen. As you can see, the 10-year yield there at 59 basis points. But we're going to want to be keeping an eye on crude oil. WTI crude up almost 2% now at $73.42.
Yeah, and Vonnie, really energy stocks are one of the few kind of modest outperformers, if you can call it that, when it comes to trading here in Australia, where we are seeing materials and energy just tracking a little bit higher. The rest of that market, though, one of the underperformers in the session. And taking a look, as you say, when it comes to oil markets that we're firmly focused on at the moment, given that we are seeing these fresh developments when it comes to the situation in the Middle East, oil rising as we see the US and UK launching airstrikes on Houthi rebels in Yemen. We've seen the benchmark WTI advancing as much as almost 2% there. We're seeing just when it comes to New York crude, they're holding most of those gains. The militant groups' attacks on ships in the Red Sea have really become an increasing issue when it comes to that U.S. reaction being more likely. Above $73 a barrel is where we're trading at the moment. Earlier this week, we did see, of course, the biggest assault to date on shipping as that key waterway, despite the presence of that US-led naval force that's supposed to deter such actions. We've seen a series of warnings of retaliation from Washington and now confirmation of US and UK airstrikes in Yemen there. We have really seen these rising tensions kind of, despite the fact that oil has been buffeted since the start of the year, moving sort of $2 each way without a clear direction. And now we are seeing a little bit more support there given the ongoing tensions in the Middle East. Still, there are those concerns about rising non-OPEC plus supply, some of those deep pricing cuts by Saudi Arabia as well at play here. Let's bring in Alessio Patalano, who's a professor at the Department of War Studies at King's College London. Alessio, really great to have you with us, and of course joining us on at a point where we're still monitoring kind of the breaking news situation here, right? How deeply does this risk the spiral of retaliation now?
First of all, thank you for having me. Listen, I think the first thing to say as a starting point is that these actions needs to be put into the context that was set by the warning, by the statement led by the United States and joined together by 11 states about the concerns over freedom of navigation. Now, why that is important? Because it contextualizes why these actions are taken, and in policy terms, it probably also very much framed the type of targets that were selected for the actions to be taken. Here, the focus is not to expand the conflict, but to degrade the capabilities that the Houthis may or may not have in order to continue to represent a threat to shipping lanes and freedom on navigation in the Red Sea. So I would be sort of very surprised if these actions were not to be highly tailored to address these specific issues, provided of the sensitivity and the wider risks in the area.
You talk about the need to kind of contextualize it when it comes to the statement that we heard a couple of days ago. Is it possible for this action to specifically just address this risk? We've already heard from the Houthi leader that there would be retaliation, a more outsized reaction than even the attacks that we've already seen. How much does this really widen the conflict insofar as it relates to some of these Iran-backed proxies in the region?
So I think, first of all, the Houthis should be considered as allies of the Iranians more than a proxy. They have their own mind, they have their own agency, and of course the narrative will be an inflammatory one. But at the same time, if we assess the context based on the type of actions they have undertaken until now, we have fundamentally three types of challenges that have been presented, and potentially a fourth one if you take attacks the Houthis have carried out against shipping over the last few years since around about 2015-17. And so we've got missiles, we've got drones, we've got small boats, raids, and of course mines. Now, the actions taken tonight, I think they can easily address the question of where these boats might be located, and certainly the launch sites of missiles, because ever since the beginning of this missiles being launched against shipping targets and more recently naval vessels, you can always reverse engineer with a certain high degree of precision where they were launched from. So I think in this respect, we can be confident that provided the build-up of tension and provided the intelligence gathered, and the fact that this is not an unknown challenge, the Houthis have been attacking on and off shipping for quite some time, as I say, going back to 2015 and 2017, and having also limited capabilities in in terms of what they can do and see. I think we'll see actions that will be primarily aimed at degrading their capacity to continue to escalate in that maritime context.
Yeah, but it will depend on, what you term capacity, right? Because they can always get more of if it's just stuff you're talking about. So, Alessio, does this risk alienating allies, not just European allies, but Gulf allies, Middle East allies?
I think it is in the interest of other Gulf states. I mean, the statement is interesting that it had some silent partners that didn't want to be on the letterhead, but certainly joined the statement in principle, and in terms of the content that it addressed, because it does present a problem to shipping, which in turn is a wider challenge to Gulf states, Egypt, and as a result of that, it also sort of it is also part of the calculation, I think, in how these actions have been coming together, of a constant working and exchanging, if you want, diplomatically engaging the silent partners of the statement in order to ensure that the result of the action would be something that would keep the, if you want, the spirit of the statement going and the type of participations going, precisely because what the Houthis are doing is not a harm just to the United States and the UK. It's a harm to prosperity, to shipping, and that is a problem that goes way beyond these two actors. It's an international community problem. The real question that one should be asking is, where is everybody else? This is not just a UK matter. It's not just a United States matter. And the fact that we shall see over the next few days, coming days, based on the reaction, where also the very common used reference to having stakes in international stability, when it comes down to proving that, is where everybody will fall on that part of the fence.
Yeah, this is about the global world order in so many ways, right? Alessio, this is happening in parallel to, in conjunction with, of course, the continued assault in Gaza. And we've seen Secretary Blinken in the Middle East, in the region this week, again, trying to push for a more targeted strategy from Israeli forces. We've also seen the opening arguments for South Africa's case before the International Court of Justice. From your perspective of war strategy and military strategy, is it likely that we'll see a change of tactics that might result in less humanitarian turmoil?
I think the humanitarian drama that is unfolding in Gaza is certainly something that is in the minds of policymakers. I think if we go back to the specific case of the Red Sea, so far the actions that have been taken were very defensive, were very reactive, were focused just on ensuring that things could carry on, and escalation has been communicated, has been sort of like laid out pretty clearly. So I think in this respect, this is all symptomatic of the fact that there is a clear sense that you cannot turn guns towards the Houthis because that will harm the ability to move on towards a process that would reduce the humanitarian impact of what's the sort of the actions, the military actions that are taking place at the moment. But I think at the same time, it's going to take a little longer, certainly more time, to find a different approach in terms of military strategy. And the Israeli government has been very clear at the moment that this is a course of action that they are committed to. So I think from the humanitarian perspective, there will continue to be an incredible amount of challenges for the international community. And I wouldn't be surprised if the United States had to continue to remain heavily engaged in order to improve the situation.
And it doesn't feel like it's anything that will help the plight of the Israeli hostages in Gaza either, Alessio, given that Qatar was the sort of intermediary the first time round, and now Qatar's hands may be tied here. What kinds of responses do you anticipate from global leaders?
I think, again, the role of the Qatari as a mediator has been very important, but the hostage situation has been very clear insofar as the Israeli government is concerned, that that is a matter of absolute critical concern. So in that respect, I think, if you want, the broader interest of the international community is truly to continue the diplomatic front, if you want, to remain quite wide, including on the one hand, a broadening of the negotiations to ensure the release of the hostages, which in turn favors the possibility of a conversation with the Israeli authorities in terms of adjusting and modifying the military behavior in Gaza in order to facilitate addressing the humanitarian element of the implications of the military operations, the way they are conducted at the moment.
All right, thank you so much for joining us. That's Alessio Patalano, Professor of War and Strategy in East Asia at King's College, London. This, of course, on the news that the US and UK have launched strikes on Houthi rebel targets in the Red Sea and, of course, the oil reaction as well. Still ahead, voters in Taiwan preparing to pick their next leader on Saturday in an election that could change the course of US-China relations. Analysis with the International Crisis Group coming up. This is Bloomberg. Let's just take a look at where some risk assets are trading on the news that US and UK forces have attacked Houthi targets in the Red Sea. Now, we're seeing a little bit of a reaction from crude. It's probably the most of the asset classes that we're seeing the most money flow into at 73.35, and we're seeing the 10-year yield just down a little bit at 396.21. But really, it's fairly muted so far until we get a few more details and some international reaction. Gold, for example, up about $3, 0.2%, and the yen is also just strengthening, although it's off its highs of the day. It is at 145.22. Let's get more on the building risks for global markets now, though. Annabelle Droulers is at the Morgan Stanley Global Alpha Investment Conference with our next guest, Belle.
Thanks, Vonnie. Yeah, let's bring in Morgan Stanley Investment Manager's Head of Applied Equity Research, Andrew Slimman, joining us this morning. So, Andrew, we were just hearing then about these strikes on Houthi rebels in Yemen. How much is that risk of any sort of escalation in the Middle East priced into U.S. equities at this point in time?
So I do think that, geopolitics always affects equities, but to the extent that there's other things going on that I think will drive the market more significantly. And I do notice that oil and oil stocks have really not responded in a rally sort of way if you really thought oil was going on. That would be the biggest risk to my kind of outlook for the year, would be if oil were to substantially increase, and that would jeopardize kind of this soft landing scenario that I think is quite likely for the year.
In terms of a substantial increase, is there sort of any percentage that you're putting on that?
You look at oil closer to $100 a barrel. Now you're starting to you'll see consumer spending start to slow, and as people have to divert their spending, and that would materially affect the economy. So as long as oil stays maintained, I don't think it will affect the equity market or the economy.
Mm-hmm. The other big thing overnight, of course, was the U.S. inflation print that came out. How does that sort of factor into your thinking around the outlook for the Fed and equities over the course of this year? One
of the things I find interesting is people perceive that when the Fed cuts, that's going to be good for equities. I'm not so sure. If you look at the history of when the Fed cuts, equities actually tend to weaken. And the reason for that is that there is a fear that why are they cutting? Is it just because inflation is coming down, or is there a problem in the economy? And that usually creates some short-term anxiety where you get a 10 to 15% pullback. So in many ways, I want the Fed to be on hold because it says to me inflation is coming down, the economy's strong enough to withstand where we are in terms of Fed funds. I think the market will rally during this period that they're on hold. I'm concerned when they first cut, you're going to hear a lot of people that come out and say they must know something we don't, and it's bad for the economy.
Because a lot of traders, of course, have been agitating for a cut as soon as March, for instance. So what's your expectation then when we would actually see some sort of reduction?
Yeah, I mean, you heard a couple of Fed members say today, I'm not so sure. I think it's going to be later. I'm not an economist. I'm a portfolio manager. So I still think it would be better if it's later rather than sooner.
But something else that's going to really play, of course, into the performance is going to be the earnings season. So a lot of the optimism and sort of was baked in last year. We saw that rally into the year end. Now it's going to be really tested.
Yes.
So what are you expecting?
Yes. So again, though, I haven't. Usually, if it's going to be a weak earnings season, we start to get indications from companies during the quarter that maybe the numbers are too high or they'll pre-release and so forth. And we haven't heard that yet. Very little. So I expect that earnings season will be okay, but the question is, how are stocks doing going into that earnings season? And many, like the financials are about to report, they've been very strong the last few days, and so the setup isn't great going into earnings season. The stocks are very strong, high expectations. That worries me, but I don't expect a material cuts to earnings for this year coming out of fourth quarter earnings reports. And if you think about the market last year, we had flat earnings for the S&P last year, but that's why the market was off the year before. So it anticipated that this year the earnings were going to recover.
When you think about the market last year, it was, of course, really driven by the Magnificent Seven.
That's right.
So do you expect that sort of trend to continue this year?
I wouldn't necessarily say those stocks are going to go down because their earnings have been very strong and the revisions for those seven have been excellent and they're going to buy back a lot of stock. But what's interesting is if you look at fund flows, net cumulative flows, they turned positive in November of this year, which was a year after the low. And when those flows turn positive, that's when other stocks start to participate. The equal-weighted S&P outperformed the S&P 500. And I think that's because when people say, well, I want to get back more involved in equities, they start to search around for other things that haven't participated. And that's when the Magnificent Seven started to underperform. And you're seeing it still year to date as other things are around. So I expect that the market will broaden out this year and there will be other areas that will participate. Not that those stocks will go down. I just don't think they'll have the outperformance.
But if someone comes to you, if I came to you and I said, I've got $100,000, I've got $1 million to invest, what's the percentage
Happy to take care of that.
Thank you. What's the percentage you're putting into the Magnificent Seven? What's the percentage you're putting into other sectors?
Sure.
What are those other sectors?
Yeah. So I think in terms of the S&P 500 or the S&P equal weighted, and I would rather have more weightings in other areas than the Magnificent Seven. The Magnificent Seven is about 30% of the S&P cap weighted right now. I think the number should be lower. You can't be at zero. Some of them are doing, I think will do well. There will be a divergence of how they do this year, but I think there's other areas like financials, industrials, semiconductors that are a little bit outside of the Mag 7. I think there's other more cyclical areas that will do better. And don't forget, it is an election year, and in an election year, fiscal spending tends to ramp up. And when fiscal spending ramps up, you're seeing the Infrastructure Act, we have a CHIPS Act, we have an Inflation Reduction Act. Those will all help the more cyclical areas of the market. So I expect those areas will do better than maybe the Mag 7. Again, not that they'll go down, just that they won't do, the differential won't be as much. And that's really what happened starting in November. You've seen this divergence close.
All right, Andrew, thanks so much for your time and enjoy the conference today. That was Andrew Slimman joining us here from Morgan Stanley Investment Managers Conference. Heidi.
And of course, Annabelle, you started the conversation off with the latest geopolitical developments. We do have more interviews lined up from the sidelines of the Morgan Stanley Global Alpha Investment Conference in Hong Kong later. Argibus Investments founder and CEO David Acera will be joining us in the next hour. As we've been speaking of, in terms of the latest that we know of these authorized airstrikes that have now been launched on Houthi rebel targets in Yemen by the US and UK. We're now hearing from a Pentagon official saying that the US and its partners have conducted these strikes on Houthi-controlled Yemen, that the US struck more than a dozen targets in Yemen. These targets included radar sites as well as missile launches. We continue to watch this for more details on these operations and where we go from here, as we had the US and, of course, Rishi Sunak confirming his authorization on these joint strikes. Let's bring our Chief Geoeconomics Analyst, Jennifer Welch. And Jennifer, we've kicked off 2024 with quite a high degree of geopolitical risk here. What is the escalated risk that we see retaliation now?
Well, thanks so much again for having me on this morning. Look, I think we're still in the process of determining what happens after this. I should note that this isn't the first time U.S. forces have interacted with Houthi forces. There were also an exchange of strikes back in 2016 when the Saudi-Houthi conflict was even hotter. So I think this is an important marker of where things are headed in the region, certainly one that has been signaled for some time, both the exchange of fire between the multinational forces and the really stark warning that they put out to Houthis just a few weeks ago. But I think it's too soon to say whether this is going to lead to a major regional conflict or if it can still remain relatively contained, but certainly something we're going to be watching closely.
The Pentagon confirming now that the U.S. struck more than a dozen targets in Yemen, and those targets included radar sites and missile launchers. So the other sort of huge geopolitical news that's going on this weekend is the election in Taiwan. What's the outlook at the moment, Jennifer?
Well, we're headed into the polls tomorrow with a very, very tight race. In fact, I think this is one of the closest races that we've seen in Taiwan in several election cycles. We have the ruling party candidate, Lai Ching-te, facing a split opposition led by Hou You-yi of the Kuomintang Party and Ko Wen-je of the new third party, the Taiwan People's Party. Generally speaking, in past election cycles, when the ruling party has faced a split opposition, that tends to lend them some favor. But this election cycle is really unique in a lot of ways. The ruling party faces the disadvantage of having to represent an incumbency, which is always a challenge in any election. And voters, are interested not just in issues like cross-strait relations, but really in domestic issues, the economy, cost of living, etc. And that, again, kind of doubles down on the disadvantages of being the ruling party at this time. So we'll be looking for the results. Hopefully we'll get them very soon tomorrow night. And I expect up until then, there's going to be a lot of watching because there's a huge potential for surprises here.
For sure, absolutely. All right, Jennifer, thank you for your analysis. That's Bloomberg's Chief Geoeconomics Analyst, Jennifer Welsh. And our special live coverage from Taiwan continues in the lead up to Saturday's vote. We'll have full results, by the way, and analysis on Monday. This is Bloomberg.
Take a look at the picture when it comes to trading across the region. We are, of course, monitoring the breaking news and the market reaction to the airstrikes on Yemen's Houthis by the US and UK. The Pentagon now confirming through an official that the US has struck more than a dozen targets in Yemen. We are seeing, when it comes to that reaction, WTI crude futures and trading generally just modestly higher. We're seeing dollar yen a little bit lower as well. Treasury futures looking firmer. So not a huge reaction, but certainly more support when it comes to crude prices. But oil prices still lower than when they were a week earlier. Elsewhere around the region, we're seeing some split trading action with Japan continuing to outperform.
We're just checking some risk assets here. We're seeing crude oil futures higher by about 1.75%. They're holding steady, though, at that range, 73.28. The 10-year yield is now flipped around a little bit, but it is at the level that we saw earlier on. Gold adding on about 0.1%, just a couple of dollars, and the yen really unchanged at this point. This is after we learned that the US and UK launched airstrikes against Houthi rebel targets in Yemen. This after a string of warnings from various diplomats, including the Secretary of State, Antony Blinken, telling the Houthis to stop irking them and to stop attacking with drones and other ways of attacking ships and people and vessels in the Red Sea. So let's bring in now Bill Farries, who joins us in our studio. We'll get to Bill Farries in just a few moments, but just recapping once more, we have had attacks in the Red Sea from the US and the UK. But let's get back to Taipei for the moment as we look ahead to Saturday's elections. Our markets co-anchor Yvonne Mann is standing by with our next guest. Yvonne.
Copy.
Yep, I'm joined by Amanda Shao from the International Crisis Group, the senior China analyst, joining me here in our live location. Amanda, it's great to talk to you in person. And obviously, it seems like there's so much global interest in this Taiwan election. Can you tell us why?
Yeah, I mean, the next leader of Taiwan is really faced with quite a big challenge. He will be facing an extremely complicated external environment in which he will have to deal with a China that has shown itself to be much more assertive on the question of Taiwan, and in a situation where it's been evident that Beijing is willing to throw a lot of resources in creating really everyday headaches for Taiwan. And at the same time, this next leader will have to deal with deepening U.S.-China competition, and it'll be a difficult road to navigate for this next leader.
The front runner obviously is the DPP. I'm just wondering if we see a third term, which we've never seen before, from this ruling party. Yeah. What does that mean for U.S.-China relations? Do you think it can just deteriorate further?
Yeah, so, it is possible the race is pretty tight right now, so we can't say for sure that Lai will win. As you say, if he does win, it would be an unprecedented third term, and it would be a real sign of the DPP staying in power as a party. In terms of U.S.-China relations, we saw that around the Xi-Biden meeting, there was a real concerted attempt to, if not entirely de-escalate, to at least hit the pause button on escalation, including on the issue of Taiwan. I think the two leaders really used that opportunity to send signals to each other that neither want to change the status quo around these elections. So I think both sides understand and are gearing up for this transitional period, but nevertheless, it's probable that we'll see an uptick in tensions should Lai win.
Obviously, we've seen indications of Beijing interfering into this election before Saturday, whether it's Chinese balloons or economic coercion, the like. What is your take on the sort of Beijing response that we could get after this election? If in fact, if it's a DPP win, in that case, what are sort of the scenarios you're mapping out now?
Yeah, I mean, I think that in the case of a Lai win, that it is likely that we will see China increase pressures, perhaps initially in slightly more discreet or less threatening ways. So they could very easily enact more economic punishments on Taiwan. They could increase military activities in ways that are a little bit more low profile. You mentioned the balloons, that would be one way. And they've really been suggesting that they are very capable and willing to do so. I think maybe the milestone to watch out for, though, in a Lai win is around May 20th, which is the inauguration. And at that point, Lai will define his understanding of the cross-strait situation. And he's not going to say what Beijing demands, because that's not what his party believes. And so at that point, we might see a more overt and forceful response, potentially including a military exercise.
It's interesting that we've seen Lai Ching-te, he first described himself as a pragmatic worker for Taiwanese independence. He's walked back some of those comments, right, and maybe aligning more with Tsai Ing-wen and saying that, there's no need to declare independence because it's de facto sovereignty already. Right. Is there a chance that he might strike a harder line once he wins?
So I think, as you say, he's been campaigning on following Tsai Ing-wen's route that she's carved out for Taiwan. But of course, it remains to be seen how he will actually govern. Now, I think he has every political interest at the start of his term to continue to maintain Tsai's line. We see probably that he will win with less than 50% of Taiwanese voters' support, and also he'll have to convince Washington that he will be, a stable leader in a fairly precarious moment for U.S.-China relations and cross-strait relations.
We've got to talk about the KMT too, because the former president Ma Ying-jeou has kind of led to a lot of headlines here in Taiwan over these comments that he made with Deutsche Welle, talking about Taiwan would lose if they had to fight with China, that you should just reduce your defense spending, and that you should trust Xi Jinping when it comes to cross-strait relations. And Ho and the KMT are really doing a lot to distance themselves from these comments right now. What do you make of all that?
Yeah, so for me, I think what that raises is, on the other side, if Ho were to win, now the KMT has been campaigning on a platform of increasing defense reform or pushing forward defense reform, just as the Taiwan administration has done. Now, so for me, what Ma Ying-jeou says suggests to me that within the party, there's still a fair amount of debate and division as to whether Taiwan or how quickly Taiwan should be pushing forward their defense reform. And so it raises questions about how exactly a Ho administration would govern, despite his campaign promises.
And you mentioned, I mean, even if there is a KMT win, cross-strait tensions might still be there. It might not be in 2024, but it's something more mid to longer term.
Right. So, the assumption here is that if Ho were to win, if the KMT came back to power, that cross-strait dialogue would resume at some point. And once those channels reopen, at some point, Beijing may feel some domestic pressures and pressures on itself that it puts on itself to deliver some outcomes as a result of dialogue. And when that happens, when they seek whether it's more economic integration or a more conciliatory political stance from the KMT, at that point we will see pushback from the Taiwanese people. And at that point, it's possible that tensions will reemerge.
Obviously, there's more on this ballot as well, not just the choice for president, but also these parliamentary elections. How important is it for any elected president to have a majority in the legislature?
Yeah, of course, it'll be very helpful for the ruling party to also have a majority in the legislative yuan. It's not looking likely that any of the parties will gain that majority. So it means that they will be dealing with a divided government. And so we can expect that the legislative yuan will serve as a form of check on executive power. It depends on how things shake out. But perhaps the most significant implication is that it means that the third party, Taiwan People's Party, will have quite a bit of say, potentially, in how Taiwan pursues things like defense spending going forward.
Amanda, it's great to have you. Amanda Shao there, Senior China Analyst at the International Crisis Group, joining us here in Taipei. Heidi, I'll send it back to you.
Yvonne, there is so much going on all along the veins of these geopolitical risks being heightened so far early in the new year. We are hearing now a statement from President Joe Biden on these coalition airstrikes in Houthi-controlled areas in Yemen. President Biden saying that at his direction, US military forces, together with the UK, which we know, as well as support from Australia, Bahrain, Canada and the Netherlands, have successfully conducted strikes against a number of targets in Yemen used by Houthi rebels to endanger freedom of navigation in these vital waterways. So we are also hearing President Biden in that statement saying that they won't hesitate to direct further measures as necessary, going through some of those coalition supporting partners there and calling these strikes successful. They are in response to, quote, unprecedented Houthi attacks. President Biden making this statement after we'd already heard that authorization being confirmed by the UK's Rishi Sunak, saying that this defensive action follows extensive diplomatic campaigns and the rebels escalating attacks against commercial vessels. Let's bring in Bill Ferries now from Bloomberg with the latest and more analysis in terms of what happens from here, the nature of these airstrikes, and does this really kind of set us on a path of retaliation and escalation, given that we have heard from the Houthis leader saying that any what they call US aggression would be responded with operations bigger than the assaults that we've seen so far?
Right, that's the big question now. One, we're still in the very early, really hour or two of this conflict between this allied set in the Red Sea and Yemen. We'll have to see how much damage was done, what ability the Houthi rebels have to retaliate. This is not a huge surprise of an attack. The U.S. and its allies have been signaling that something was likely to come. The U.S. says that there have been so far 27 attacks on commercial ships in the Red Sea since the Israel-Hamas war started in early October, and those attacks have been escalating. So we know in the last few days that people on both sides have been expecting some sort of action. Really, the big question is to what degree can the Houthi rebels respond to this in the coming hours and coming days?
And to what degree can they replace the radars and the various bits of infrastructure that the US and its partners, which it seems to be the UK with support from places like the Netherlands, Australia and Canada, have done? So, Bill, can they replace these pretty easily? I mean, they seem to be undeterred.
Yeah, that's the big question is whether, they have been moving some of their critical equipment to more secure locations. The early reports are that perhaps more than a dozen sites have been targeted by this U.S.-UK-led action. But we just won't have a real damage assessment for quite a while. And the Houthis, as you said, have promised to retaliate in a big way. So we'll have to see whether they are able to carry that out at all. We know that they have gotten a lot of supplies over really the past decade from Iran. We don't know what kind of stockpiles they have that might have survived this initial attack. So those are all the big questions. It will be much more difficult for Iran to get fresh supplies into the Houthi rebels with such an armed presence in the Red Sea right now, but it won't be impossible. I think we just will have to be waiting to see to the extent to which this is a setback for them and their efforts to disrupt the shipping in the Red Sea. But it's almost a foregone conclusion that shipping is going to be increasingly routed in other ways for at least the time being.
How much of a setback is this when it comes to the foreign policy efforts that we've seen from the likes of the US and the UK, but the US in particular, right? Secretary Blinken was just in the region over the past few days. Does this really complicate an already complex, in a lot of ways intractable situation in terms of how to manage what's going on in Gaza and how this regionalization of the conflict might be prevented?
Yeah, a big focus for the U.S. and its allies has been preventing the Israel-Hamas war from spreading too much in the region. That already had happened a little bit on Israel's northern border with the back and forth between Hezbollah and Israel. But this is certainly another step in the direction the U.S. Didn't want to see. It raises the risk somewhat of bringing Iran further into this conflict. It doesn't necessarily mean that the conflict is now a regional one, but it seems to be heading in that direction at this point, with no end in sight to what's happening between Israel and Hamas.
Exactly, and Asian shipping stocks, as you were saying, Bill, are advancing after those airstrikes on Houthi rebel targets in Yemen. That's Bloomberg's senior editor, Bill Faries. And you can also turn to your Bloomberg for more on this. T Live has excellent commentary and analysis live, in fact, from Bloomberg's expert editors. We'll continue to keep you updated on this story and more. This is Bloomberg.
Take a look at the market reaction given what heavy news flow when it comes to the geopolitical developments, the US and UK and coalition airstrikes that have been successfully, according to the White House, conducted when it comes to Houthi-controlled parts of Yemen. This is a picture across FX in particular. It's quite interesting. The reaction has been very, very muted. So it seems like as far as investors are concerned, this is not a perhaps big enough escalation at this point to warrant a large pickup in any kind of risk-off sentiment, though. But of course, if it does continue to escalate, we're looking to the dollar in terms of more flows and potentially a move in the yen there as well. Dollar yen holding pretty steady at 145. The Aussie dollar still just sitting kind of stubbornly under that 67 US cent level. We did see a little bit of a pullback when it comes to the dollar rally overnight as we had that inflation picture change a little bit. But of course, ultimately expectations for easing from the Fed not to dramatically move. The Kiwi dollar is trading at 62.39 at the moment. We did get, of course, that statement explaining the airstrikes and President Biden ultimately saying that there's no hesitation for further measures as necessary. Well, from the Middle East to, of course, the other major economy that we're watching, China. Economists are expecting China's December trade data to show demand remaining weak both at home and abroad. We'll also get inflation numbers over the next hour. Consumer and producer prices seen falling for a third straight month. So let's bring our China economy editor, Jill Deeses, for more. And Jill, let's start off with the price picture, because there is this broader concern that we're starting to see a pretty significant demand downward spiral from these deflationary pulses.
Yes, Heidi. So we'll be getting those numbers out in just about 45 minutes or so. At this point, there's pretty broad expectations that both consumer and producer prices will have fallen into deflation in tandem with each other for the third consecutive month. Of course, those factory gate prices, those have been in deflation for quite a bit longer. But look, I think that really the story here, Heidi, is when you look at these consumer prices, these deflationary pressures that exist. I mean, this is really that symbol of how weak demand is in China right now. Confidence has been under major pressure for the past year after the reopening from the pandemic. These are really kind of indicating these really widespread concerns about China's ability to sort of revive demand and revive confidence. The numbers, I think, are expected to show for those CPI figures, that headline figure, that maybe food prices in December weren't as much of a drag on prices, but transportation, as people are, it's winter months, so people are not traveling as much there. But ultimately, yes, it really is spelling the broader concern for the economy. I think that when you look at what the government can actually do to sort of help things, we're pretty widely expecting there to be a pretty key policy rate cut to kind of stimulate demand and combat some of these deflation pressures on Monday. We'll see if that ultimately happens, but it does signify that there are some pretty big concerns on deflation as we gear up and get into 2024.
And Jill, what are we anticipating in terms of the MLF? Will we definitely see action?
Well, I think that at this point, it's pretty. Most economists are expecting there to be some kind of policy rate cut there, 10 basis points. We haven't seen that since August, when there was actually a surprise cut to that policy rate. I think at this point it would be a pretty big shock if there wasn't any kind of rate cut once we gear up into Monday. Maybe we'll also see a bigger net injection of liquidity to kind of help with some demand for financing there. There's just, at this point, very broad expectations that the government has to do something more than it's been doing to kind of help the economy, help revive activity here, maybe support credit growth. But I think at this point, there's also this understanding that there's only so much that policy rate cuts can do. So once we get past Monday, we'll see what ultimately happens there. But then I think the attention's really going to turn to what other types of targeted measures the PBOC, other government agencies can actually do to stimulate growth here. Does that come in the form of targeted lending programs that they've been starting to make use of? Is that something else? We saw easing of some mortgage rates last fall to kind of stimulate property sales. But ultimately, yeah, I think it's going to be something that has to be a little bit more comprehensive, holistic to actually get this economy going.
All right, Jill, thank you so much. And much of that data coming in the next couple of hours, so do stay tuned. That's Bloomberg's China economy editor, Jill Deeses. And we just got some word from Tesla about China as well. Tesla is cutting the price of its revamped Model 3 in China by 5.9%. Once again, Tesla cutting the price of its revamped Model 3 in China by 5.9%. Now, it's down about 1% in the after-hours trade. This also, though, on a Reuters report earlier that it has to hold most of its Berlin site output on the Red Sea conflict, which continues. Plenty more to come on Daybreak Asia. This is Bloomberg. And we're checking the market reaction following airstrikes on Houthi rebel targets by the US and UK with support from some other countries such as Bahrain and Australia. As you can see, Asian shipping stocks are moving higher, with Korea Line up more than 7% at this point and continuing to climb. Hyundai Merchant up more than 2%, Kawasaki Kisen up 1.8%, and Mitsubishi SK Lines up about 1%. So it seems like Korean shipping stocks are moving higher faster than Japanese shipping stocks. Let's take a look at some defense stocks now while we're at it and see how they're trading. So as you can see, several defense stocks in Korea and also Japan on the move, higher for the most part, though there is one there that is down about 0.25%. Heidi.
Yeah, take a look at the futures picture as we're getting into, what was already setting up to be a pretty mixed picture across Asia. Of course, now with this added geopolitical overlay, we are seeing a little bit more caution there. S&P futures down by just about 0.2%. We're also seeing TAIEX futures, Taiwan, unsurprisingly, a bit of risk aversion going into the weekend's election is going to be key in terms of this geopolitical test for cross-strait relations. But having said that, even though volatility expectations for the Taiwanese dollar are high over the next week, we are also seeing traders the most bullish on the currency in about 16 years. So watching FTSE A50 China futures there a little bit to the downside. We are getting, as we spoke about just a few minutes ago, the key inflation data as well as trade numbers, export-import numbers out of China as well. Dollar China holding pretty steady at just over 7.16 there. Take a look at what else we're watching when it comes to perhaps some of the elements of the markets that could be a little bit more sensitive to these rising Middle East tensions. Oil has been pretty much sort of the only beneficiary there, as we've seen quite a bit of support when it comes to New York crude, still trading pretty close to 2% higher there. We've seen that kind of lack of direction characterize crude trading since the start of the year, and of course so much of that has been on the supply, the pricing situation when it comes to Saudi Arabia and some of the supply concerns over non-OPEC members in particular. But New York crude outperforming as an asset class, if you will, in reaction to the strikes really crossing news wires. We have really seen more of a muted reaction when it comes to some of the other kind of haven demand elements that we might see. Gold a little bit higher, dollar yen largely unmoved, but certainly if the sort of escalatory nature of this news flows develops, we will see more moves when it comes to the yen and when it comes to flows to the dollar as well. That is just about it for Daybreak Asia. Our markets coverage does continue. We're looking ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. Stay with us. Bloomberg Markets, the China Open is next. This is Bloomberg.